Assalamualaikum warahmatullahi wabarakatuh, and my name is Muhammad Zulafnan bin Zulkikli. Today, I will be presenting about definition of unit trust. As everyone know, unit trust is a collective investment scheme that obtain funds by pooling funds from group of investors or many investors that share the same financial goals, investment policy, and risk tolerance. So it is a professionally managed investment and may not be available to an individual investor. So it is a diversified portfolio that have various investment. As for the Islamic unit trust, it is a subset to the unit trust sector and it is a part of a component in the Islamic stock market. So in Malaysia, unit trust sector regulates by the Securities Commission to help the investor in order to protect them and ensure the fairness in the market. This helps them to prevent from like scam, fraud, and ensure that the Sharia in compliance investment are compliant with the Sharia law. Okay, next we move on to the Islamic unit trust in Malaysia. So in the early 1993, a private unit trust fund were introduced and that became the beginning of the structured Islamic fund management in Malaysia. So the first Islamic unit trust fund, which is Tabung Itikal by the Arab Malaysian Securities, introduced on the 12th January 1993 and became the precursor to the development of Islamic unit trust in Malaysia. And because of that, years later, more Sharia unit trusts were launched, and thereafter, by the 31 December year 2000, there are 13 unit trusts and 99 Sharia funds. So, as this rapid development in our country, it shows that our government willingly to show their continuous commitment in order to setting up a fully fledged Islamic financial system in our country.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muammar Khairi. Today I would like to present to you about the structure of a unit trust fund. Firstly, we know that a unit trust fund is a collective investment instrument where investors with similar objective will pool their funds. Their fund then will be invested into a portfolio of assets such as Islamic equity fund, sukuk, cash and other relevant securities. Generally, in a unit trust fund, it involves three parties. However, in a Islamic version, it involves four. Firstly, is the unit holder of the investor. Unit holder of investor is the one that will invest their money into the fund. Secondly, is the manager. The manager is the one that administer and manage the fund on behalf of the unit holder. Next is the trustee. The trustee is the one that safeguard the unit holder's interest, ensuring that it complies with the Sharia law and the common law. And lastly, we have the Sharia Committee. The Sharia Committee is the one that will ensure that all daily operation of a Sharia compliant unit trust fund must comply with the Sharia requirement of the Security Commission and other relevant Sharia authorities. And lastly, the Sharia advisor will supervise and provide necessary advice to ensure that the unit trust fund is Sharia compliance.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Fikri bin Ibrahim. Now we will move on to the types of unit trust in Malaysia. According to the Federation Investment Manager Malaysia (FIMM), there are three types of Sharia-based unit trust in this country. First is equity Islamic, second fixed income funds, and third is Islamic balance funds. Now we will go through one by one. The objective of equity Islamic is to achieve steady capital growth by investing in Sharia compliant investments. This type of fund is quite popular in Malaysia. As we know, there is fund management in unit trust, so they are the one that bear the responsibility in issuing the units of funds towards the investor so they can subscribe or purchase the fund units. Example of fund manager or manager company that has been listed in year 2019 are BIMB Investment Berhad, Amanah Saham Nasional Berhad, and RHB Asset Management Sendirian Berhad. So what are the steps taken by the fund manager to ensure that equity Islamic remain in existence inside this country. First, maintain a reasonable level of exposure to equities over time. So there will be a diversified portfolio to be joined by the investors, which means they have more options. Second, investing in market abroad to open more opportunity. This seems like the first point. And lastly, consider attractive investments in unlisted equities. Since we know fund manager is responsible for the success of funds, they need to study the financial industry and economy. So when they are up to date to the current trends in the industry, it will be much easier for them to make decisions in order to meet the fund's goal or objective. Next, the objective of fixed income fund is focusing on generating regular income. Investment activities concentrate mainly on government and corporate bonds, government securities, money market, cash deposits, and more. As an example, Sukuk, which is well known in Malaysia. The returns profit for this type of fund is very low compared to the other type of unit trust fund since it has low risk, as you can see in the picture below. The objective of Islamic Balance Fund is to achieve medium to long-term growth in both capital and income by investing in permissible Sharia compliant investment. If we look back at the previous type of unit trust fund, equity Islamic focus on shares while fixed income fund focus on fixed income securities. However, this type of fund consists both of them. In a situation where the market is declining, more fund will be placed in bonds, and while more fund will be placed in shares if the market price increase.
My name is Mohamad Azizi, Mr. Samsuddin, and now let's see the advantage of unit trust. The first one is diversified. Unit trust fund invests in diversified portfolio of securities to reduce the overall risk borne by the investor. The second one is professional management. Unit trust fund have professional management which frees the individual investor from managing his own portfolio. The third one is affordable, which is investor with modest amount of capital can invest and get advantage of the service provided by fund management company. And also attractive services, which is unit trust fund offers several attractive services such as record keeping, monthly withdrawal plan, and automatic reinvestment of dividend. The fund is ideal for small investors who have no expertise in doing research and analyze investment on their own. And the last one, access to portfolio. An individual investor can also have access to portfolio that might not be possible to other investment. And now let's see the disadvantage of unit trust. Investing in unit trust fund involves fees. The charge composed of the initial service charge, upfront charge levied by the manager of the investor to cover the cost of distributing or selling the unit trust fund, around 5 cents a unit. Ongoing management fees, and which is annual fees paid to the manager for managing the unit, around 1.5% per annum. And the last one is advisory fees, which is the fees charged for service rendered for financial planning, which is free charge based on time or size of portfolio.
Okay, now let's look into one of the challenges of unit trust, which is gharar and riba. So, as we know in unit trust, there is a conventional version and Islamic version. So, there are few similarities between these two, which is the buying and selling, but there are also differences that make an exception between these two. And as we know in Islamic unit trust, the primary characteristic is that the investment must follow with the Sharia rule. The Islamic unit trust sector always be part of economic activities and companies that must follow the Sharia requirement. So, the Sharia provision against riba and gharar make the portfolio less diversified compared to the conventional unit trust. In Islamic unit trust sector, the managers tend to invest in the equity market and the real estate and always avoid into the Sharia non-compliant investment, which make the portfolio less varieties of investment. This always occurs because the conventional does not compliance with the Sharia. Hence, the limited investment that we Muslim investor must face. And in Malaysia, where we practice the dual banking system, this conflict between the conventional and Islamic always occurs, and we cannot avoid it. So we can hope that in future there will also be more research in order for us to invest in more Sharia compliant investment. I think that's all from me. Thank you.
Next, we go to the challenges of Islamic unit trust fund. Okay, firstly is the lack of awareness and understanding among public. In a survey conducted in UAE, it is stated that majority of the Muslim community have never heard of Islamic unit trust fund, while some of them argues there are no difference between Islamic unit trust fund and the conventional one. Okay, to cater this problem, the government should play a vital role to spread the knowledge on this matter. Okay, it needs support and encouragement from the government by conducting seminars and other related information that can be spread to the mass media to further educate the public about the concept of Islamic finance. Second is the problem that occurs due to the different views between Islamic and conventional. For example, in the case of a unit trust fund, some companies may neglect to deduct zakat from their profit. In contrast, Islam suggests that zakat to be paid to the poor and needy. The Sharia Advisory Council of the SEC should be more productive to tackle this deficiency. They should address the matter related to the Sharia principle and conduct proper discussion to overcome the issue in a proper manner. As a result, better coordination and consistency of a Sharia ruling will prevail in the future. The Sharia expert and professionals should meet together, discuss, and develop a versatile Islamic financial product which suit the present and the future needs. On the other hand, from discussion held by both parties, knowledge gap also can be diminished over time, and this will directly reduce the resistance and enhance the cooperation in promoting any financial product.
Now we will carry on to the next issue, which is issue in unit trust management fees. So, what is the problem? The problem is high charges which is being imposed by the fund management industry towards their retail client. So, this will burden the investors that join the unit trust funds. The causes of this problem can be categorized into three parts. Firstly, compounded cost of front-loaded fees, which mean the sale charge or commission fees that we have to pay at the beginning of investment. Second, compounded cost of management fees, where the investor need to pay the management fee whether they make or lose money. And lastly, management fees grows over time. So the solution for this problem are trying to avoid taking the EPF savings for investment in unit trust fund. For any investors taking out their money for their own investment or in unit trust, perhaps it best to leave it to the EPF since it is exposing them to investments to equities, fixed income, real estate, and private equity, while being diversified at the same time. Next, investors need to get the right consultant through qualified professional. This suggestion is good for them that just started investment and want to know more knowledge about investment. And lastly, investors should consider other factors rather than solely relying on the returns data.
Issue in EPF. What is the problem? Investment growth is not guaranteed and the fee can be higher than the profit. The cause of the problem. The first one is inflation risk, which is the risk that the investor invest in unit trust fund may not grow at a rate that keep pace with inflation. This would reduce the investor purchasing power even though the value of the investment monetary term has increased. The second one is manager risk. Day-to-day management of the fund by manager, which will impact the performance of fund. For example, the investment Decisions undertaken by the manager as a result of an incorrect view of the market may adversely affect the performance of the fund. The third one is too many charge. In order to operate the unit trust investment, those fees need to be included, such as service charge, management fee, and exit charge. Okay, the problem from Islamic point of view is in investing there is always up and down of the growth of investment. This investment of unit trust can only be approved by refer to the investing fund or doing transaction that are compliant with the Islamic Sharia law, as the fee that include in the transaction of unit trust investment are allowable as long as the fee being stated forward without any hidden element in that fee. The detailed amount of the percentage of fee should be stated before the contract agreed to avoid dispute later. Okay, as the solution to this matter is identify the best performing fund, understand different type of fund, and the last one is determine the cost of entry.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ameen Soleh bin Muhammad Ramli. I will continue to present about issue in unit trust, which is in specifically I will focus on IRIS issue. IRIS is a long-term investment with high potential. The performance and significance of Islamic rates in Malaysia have been measured in perspective of risk-adjusted performance and correlation. Malaysia is one of the fastest growing country both in Asia and in the world. When we look, Malaysia is one of the best advanced improvement or development in Islamic capital market. Improving the quality of space and life give very high impact on society life. So to get a best improvement in our country about the IRIS investment is increased effort in making the community aware of the benefits of participating in IRIS. Secondly, streamline management and application in the IRIS platform to make easier for the public to use. Third is constantly empowering and strengthening the investment industry. So the last issue of unit trust that I will present is about purification of Islamic unit trust funds. Purity in almost every aspect of a Muslim life, including in one's income and wealth, is a major concern in Islamic and Sharia. Allah Subhanahu wa Ta'ala said in Quran, A'udhu billahi minasyaitanir rajim, خذ من أموالهم صدقة تطهرهم وتزكيهم بها, which is the meaning is of their wealth take zakat, that so you might purify and sanctify them. In Islam, the unit trust management company does not pay the zakat on behalf of Muslim individuals and get legal entities who are investors of the fund. These investors are thus required to pay on their own behalf. So we must make a solution of this problem, which is streamlining the industry with more efficient system needs to be done in line with technological advance. Second is fund managers need to be more in forefront because it can provoke various reaction in society. For the conclusion of our present today is the unit trust funds or mutual fund is a collective investment scheme that pool investor money, invest it with a specific objective, and most importantly by a professional fund manager. Someone must grab the change that have many benefits for our staff, and then the country can also get the benefits. The demand of the Sharia-based unit funds also shows significant increase in trend. So let's invest in unit trust. Thank you.